Hello, this is Sasha Siddharth performing financial audit as an independent financial auditor for the company Wonderful Nature. So let's dive right in. Audited the accompanying financial statements of Wonderful Nature as of 31st December 2020, and I am not accepting or assuming responsibility to anyone other than the board of directors for the audit work and for this report or for the opinions that I have formed. In my opinion, this is an adverse report. The Wonderful Nature financial statements do not give a true and fair state of the group affairs as of December 31st, 2020. They have not been prepared according to the US GAAP or generally accepted accounting practices and have indications of misstatements, and the impact thereof is high. This is the accounting books for the statement ending 31st December 2020. This is the balance sheet as of December 31st, 2020. And as is this shows the liabilities. This is a statement of cash flow for the year ending 31st December 2020, as given in the case study. There are three particular inconsistencies which I will take you through in the upcoming slides, which is the addition of wrongful revenue to the cash flow statements, the debt that was written off from 3 million to 6 million, and the increasing of useful life and thus decreasing of the depreciation. Wonderful Nature was paid 30 million for the delivery of goods, and they haven't delivered yet, but they have added the sales of $17 million, which has caused the gross profit to be a faulty value, and thus the income statement is wrong. According to GAAP, you cannot add the revenue until you've made the delivery. It is necessary to write off a bad debt when the related customer invoice is considered to be uncollectible. Otherwise, a business will carry an inordinately high accounts receivable balance that overstates the amount of outstanding consumer invoices that will eventually be converted into cash. Instead of the historical figure of $6 million, the accountant put $3 million into the balance sheet, creating a mess for the company. The expected useful life is another area where a change would impact depreciation, the bottom line, and then the balance sheet. The company changed its expected useful life to a total of 10 years, but it keeps the salvage value the same. Wonderful Nature recognizes gains on sales of assets, especially if those have a material impact on total net income. Financial reports should have been investigated more thoroughly. This means that they showed that the depreciation value was lesser, thus showing that the profits had increased when in fact they had not. This is one of the main reasons for my adverse opinion. In conclusion, due to the blunders of Wonderful Nature balance sheets that I have to blame the accountants for, I have no option but to declare an adverse opinion, as the mistakes made in the balance sheet that make them imbalanced are blunders and should be recognized as such. The company needs to restate and complete another audit of its financial situation, and investors should consider this a red flag. Thank you for allowing me the opportunity to audit Wonderful Nature as an independent financial auditor.